Good morning, everyone. Welcome to our Thursday morning trading room. It is Thursday, isn't it? I tend to lose all track of the days. Okay, so yesterday the market drifting a little. You saw there in the overnight there was a rather substantial sell-off, but we had the market move a little bit lower in the afternoon, recover slightly again, and pretty much finished the day perhaps a little bit lower than where we began, but not significantly so. Big sell-off through the Asian session, and then a recovery again through the overnight, through the European session. So a really odd kind of trading day yesterday. Normally, if a market is trending one way or another, it makes gains, right? It'll make gains higher or lower, but not so much yesterday. I don't think we're anticipating any major reports today. Yesterday, of course, the FOMC statement came out. I suppose that accounted for some of the negative impact through the Asian session, but like I said, it recovered, so you can't really say too much about it. Anthony thinks we're going to have a sideways trending market today. He says his target is 62.28. Well, I don't think we're going to need too much drift to find that. In fact, it looks as though the market's trying to head there right now. Yeah, a good way to look at this, Anthony says, we got a butterfly effect. It can go either way. Slow trending move today. We have been in a bit of a sideways grind for this whole week, I think. Monday, excuse me, Monday I think was a decent trading day. And then since then, we've just kind of had small gains and not much more than that. So a little bit of bearishness out of the gate. And we'll see if that continues to hold. The hawk gave us actually a combination of signals here on the open. We had the first micro macro cross right on the open, kind of slipped into a 4-arrow consolidation there. Market still continuing on that move. The Falcon gave us our trend change signal right here. And the Eagle, well, the Eagle band technically still bullish. So it hasn't given us any signal at the moment. The euro climbing ever so slightly, and gold also trading punches with the bulls and the bears. No real progress there either. So there's just not much going on here at the moment. Mark, you are a brave fellow. Mark says, I took that Falcon trend change signal out of the open, took 3 cars on it, hit its profit target. He starts the day with a $300 profit. Nicely done. Yeah, you could be right. Anthony says, I see 6,200 as a potential target. So primary support down here at 6,209. 6,200 was a fairly popular number the last few days. And of course, it's a whole number. The markets tend to give us some sort of reaction around those levels. Here on the Raptor, what I'm waiting for is a cloud crossover. If the market's going to continue, continue lower, and the Raptor is going to produce a signal, the first signal that's going to come up is the cloud crossover signal. That's the number 1 signal. It attempts to pick up a new trend. And let's see what else we have going on. Well, not too much here at the moment, but it is early. We're only, let's see, 7, 8 minutes into the session so far. We'll see if the momentum holds. All right, here comes that reaction now to the hard edge. You can see we drifted right down here to the median line, almost hit it right on the number. Getting a little bit of a reaction, but nothing to get too excited about just yet. This resembling a little bit of an early cloud crossover. Cloud's not fully crossed, just the soft edge. We have a little bit of a pullback. This is one of those discretionary signals. The problem with this signal is covering the trade. The entry is fairly obvious. We're going to enter here below the low. Where do we cover the position? Well, the ideal stop is up here, but I already know that's going to be out of reach. I suppose if you really wanted to take that trade, you could at least cover here to the hard edge. It's a rather aggressive stop placement, but it might be enough to get you by. We'll demo it here. Let's see how it works out. But what I would rather see is a little bit more of a pullback. The clouds actually cross over. That would give us a better test of the extreme. Right now, we don't really have a retest of the high, do we? Okay, I'm getting to the hard edge now from the other side. You can see the Raptors actually producing buy signals. All right, I'm going to cancel that for the moment. Richard's asking, in this case, what about a short long? I think that's what the SL is standing for, above the 0.618 bounce. Let's see, the 0.618, are you referring to, I think maybe the ATR? Sure. This is now kind of forming our number one signal, our cloud crossover. It's still a little premature because the hard edges haven't crossed yet, but it is resembling a cloud crossover a little more. So you could certainly look to enter here, or you could look to try to enter below the low again, a break of the low. The thing is, there's a dozen different ways to get into a trade, a dozen different excuses to get into a trade. I don't think that's the challenging part. The difficult part is, well, obviously being selective. And if this is something that you've been following and you've been getting good results off of, then yes, by all means, go ahead and take the trade. A lot of people don't know this, but the ATR, the super trend, the chandelier, these are not just stop strategies, these are actually entry strategies. So here on the chandelier, for instance, you would look to buy. It's an always-in trading strategy. Same thing with parabolics, actually. But whether this were ATR, supertrend, chandelier, the idea is once the market trades through the chandelier average, you buy, and you stay in that until it trades the other way. And you can see when the market's trending, you can get some really good results. And then you would short here, and now you would be short. So it's an always in type strategy. And it's not bad until the market does one of these kinds of things where you start going sideways. So you would sell here, you would get stopped out for a loss, you would buy here, you would get stopped out, oh, looks like pretty close to break even, you would sell here. Oh, that would work out not too bad for you. So it's an interesting concept, and I think that's what Richard's getting at, is using the ATR. The prices are bouncing off of here. Would it be okay to short? Yes, yeah, definitely. You can see the ATR is a little bit more aggressive than the chandelier was. So if we go back here, you would buy here, you would take profit and sell here. You would be out for a small loss, but you would buy, and then you would, sorry, I'm getting confused. You would be out here. If you were really, really strict on it, you would short here, out for a small loss, you would buy again, and so on it goes. Yeah, so I think that's what Richard was getting at, the stop loss there. So looks like we're going to get a test of the extreme, or of the overnight highs. The morning highs sitting right about there. Ooh. Mark says, I took another 300 on a divergence trade to the upside when the hawk hit the median line. Maybe two and done. We'll see what unfolds. The eagle here giving us a reaction to the hard edge. Remember, whenever you hit the hard edge, you should anticipate a reaction. So we got the reaction. The price has actually drifted through the hard edge, but that's okay. The band remained bullish. We got a green bar, sorry, a red bar buy. This would also be our first in sync eagle signal. And it looks like that's making some pretty decent gains to start the morning as well. For the most part, though, we're still sort of sideways. Which makes trading a little bit more difficult. It's tough when you're just flip-flopping back and forth. All right, we got the makings of a cloud crossover now on the Raptor. It's not there yet, but we're getting there. Okay, there's the warning dot. Here on the Hawk now we're also getting a macro pullback. It's also trying to work into a 4-arrow consolidation. Got an early trend change signal here on the Falcon. That worked out pretty good. The Falcon actually giving us some decent signals here this morning. Anthony says bear market right now, strong downtrend. This is a setup for a failure going long today. 62.25 and 3/4 in a sideways market. You could be right. I'm thinking I'm having a little bit more of a bearish type attitude toward the market today as well. Mostly because of the last couple of days, the sideways drift that we've seen. In fact, allow me here to build a daily chart. Might still be a little bit early to say for sure. And I always seem to get into trouble when I try to short the stock market, but we'll see here. Let's take a look at the daily NASDAQ. So here's today's session. And you can see just huge rally followed by, this was Friday, Monday, Tuesday. Wednesday was a slightly bearish day, a little bit of a poke up and a failure. A lot of traders will be drawing trend lines here. So it does look like if it comes down 62, maybe even 51, just kind of eyeballing this a little bit, 61.80, 61.70, 75. And obviously there's strong buying support down here at 6,100 from where the market took off. Yeah, it's, I don't know, it's pretty neutral. A little bit on the downslope today, though. Looks like Thursday is going to be the first day not to put in a new high for some time. Which is why we're getting the little flip-flop back and forth. Not missing too much right now. The hawk into yellow bars, we are producing a first micro macro cross lower. Everything is kind of twisted up and sideways, so you can see the falcon starting to change over again. This is not how things normally work. We don't usually see the market flip-flopping quite so much. And that's making it a little bit more difficult to get a handle on things. All right, so this now an early trend change signal. Oop. And it didn't print because this is, like I said, one of those discretionary signals. I called it trend change, but I meant early cloud crossover. What I'm seeing here is a retest of the high. And I thought there was going to be more follow through. Now we're getting a retest of the low again. Still just kind of moving sideways. The hawk, first micro macro cross. Oh, no, that was off a yellow bar. This will be the first micro macro cross here. And the Falcon with their trend change signal. So it's dealer's choice. All right, let's take a look at this hawk signal. It's the first micro macro cross. It's early-ish. Oops, hey, come back here. All right. Are you going to give me a second chance? No. It's a little bit late on that. All right, so the Raptor in a little bit of a mess. This could be seen as an early cloud crossover. So the clouds crossed, most of the clouds crossed. There was that little bit of a pullback, and then there was the signal. Now the clouds are getting closer to a proper cloud crossover. We should anticipate a little bit of buying here on the lows. But once we get through here, we can probably anticipate a little bit more follow through, because this is the notion of trapping traders, or possibly trapping traders out of their trade. Okay, there's a little hiccup. Oh dear. Yeah, so we already got the trend change here on the Falcon. We got the first micro macro cross on the Hawk. And the Raptor is going to drift a little bit here, probably get a bit of a delayed reaction off of the breach here of the median line. All right. We've got the warning dot. We don't have the signal prompt just yet, but what we're looking for now is the #1 signal, the cloud crossover signal. Lots of volume coming in here now. Actually getting a little bit of volatility for a change. I wouldn't mind seeing a little bit more of a pullback. You can see we've got the clouds fully crossed. We've got the warning dots. This will produce a #1 signal. The problem is, where am I going to place my stop loss? Right? If I enter here, I know the market's inclined to pull back to the hard edge. So I really need to try to place my stop a little bit deeper. Well, ideally, the high of the morning would be a great place to put the stop. That's pretty rich. We'll see if we get a little bit more of a pullback before the next move lower. All right, so I'm going to anticipate this signal printing. This is this is not the best looking of trades because we're right back here toward this low. That's where we're getting the reaction. My concern is it will bring me in and then trade back above the high. Alternatively, what you could do is you could enter below this low down here. That would be a higher probability. See, there's the number one. Okay, so far so good. All right, we got break even, and it should try to sneak down here to the 62.17¾ area. And hooray for us. Wow, getting some half-decent follow-through on that as well. Anthony, way to go! Anthony got his $100 million this morning. Nicely done. Good job, Anthony. Dan's asking, good morning, Eric. How does one scalp with the Raptor? Well, if you're talking about scalping in terms of producing more signals, probably the easiest thing to do is to reduce the brick size. Technically, scalping has more to do with the profit objective. If you're in and out of a trade for $50, that tends to be a scalper's target versus swing trading where we have a $100 profit objective, although many traders will try to take advantage of a larger move in the market. But as I've mentioned before, it's not a business of generating more signals. You know, a lot of people have the impression, oh, I'm going to be a scalper. I'm going to be in and out of the market 100 times a day. I'm going to make a fortune. This is actually, I had one person come to me years ago for coaching, and he said exactly that. In so many words. He says, Eric, I want you to teach me how to be a scalper. I want you to show me how I can take 100 trades a day. Because in his mind, that's what scalpers do. I don't know what movie he watched or what book he read, but he envisioned himself as one of these high-frequency traders, just like the guys on the floor, the ARB traders. You get in, you grab a quarter tick, you get out. And you do that 100 times a day, and you'll make a fortune. Well, yes and no. First off, it is true that the Wall Street firms do that kind of trading, the high-frequency trading. They have very sophisticated trading algorithms to do it. What a lot of people don't know about their high-frequency trading algorithms is that they'll burn through an algorithm in about a week. That's how quickly the market will adjust to what it is they're doing, sometimes even sooner than that. So don't think for a moment, just because they're in and out, in and out, in and out, that somehow they have some sort of edge. We don't. They're in and out very frequently, but the key to their success is that they trade size. So they go for the smaller profit objective, and in return they get a higher probability trade. We spoke about this a little bit yesterday. So to answer your question, Dan, if you want to produce more signals, the easiest way to do it is to reduce the brick size. However, if you're just going to go for a scalp mentality, see, the nice thing about a scalper's mentality is because you're going for a smaller profit target, you can very often get by with a smaller stop loss. And what that means is you can usually increase your position size because you're not planning on being in a trade very long. Right? This is like trading the Russell or gold or how crude oil used to be. Shoot, crude oil would give you a $50 hit in a heartbeat. Right? You get a signal, you put in your trade, you take your 2 or 3 contracts, and you'd be in and out in a minute, maybe 2. This is how I used to trade the bond market. I would only look for 3 ticks on the bonds. Well, at $31 a tick, I'd be making almost $100 a trade, well, a little over 90. But it wouldn't take very long to get 3 ticks out of the bond market. But please don't think that in trading you're going to make more money because you trade 50 times a day versus 5 times a day. It's going to be a lot easier to find those 5 trades than it is going to be to find those 50. Alternatively, you could look at a tool like the Hawk Microscalper, which has been specifically formulated for scalping signals. If you're bored trading the Raptor, the Hawk will give you more than enough opportunities to trade. There are no shortage of signals when it comes to trading the Hawk. We have our first micro-macro cross. We have our 4-arrow consolidation. We have our macro pullback. And you can see these are all high probability signals, all of which would have hit their high probability scalp target. So if you happen to be all in, all out, you could grab your 10 ticks, no problem. So here's trade number 1. So you can, depending on your account size, right, you grab your first profit. Here's trade number 2. Grab your second profit, and then here's trade number 3. And you grab your third profit. So, like I said, if you're looking for more signals, not necessarily more money, but more signals, the Hawk will give you a lot more signals. Now we're into a green bar sell, which tends to develop near the end of a trend. Dan asks, I wonder if there's a way to identify the Hawk and Falcon signals on the Raptor. Well, yes and no. The Raptor is a hybrid of all 3 of the other birds. So it includes elements of the Hawk, the Falcon, and the Eagle in the one trading system. That's why very often you're going to see signals coincide, like this number 2 signal right here coincides with, I bet you, the breach. Oh, no, it didn't print the green bar. See, there are times that the Raptor is even ahead of the other tools. I was going to say this number 2 signal coincided with the green bar sell on the hawk, but I got a little bit ahead of myself. Most of the Raptor signals will coincide with Falcon signals because the primary signal generation on the Raptor comes from the Falcon. Let me get the Geiger counter out of the way. So this trend change signal that occurred coincides with the number 1 signal here. Oh, actually, I guess it was a little bit later. The trendline touch signal coincides with the number 1 signal. Let's see, what else did we get here? Well, not much. The Raptor's been pretty quiet this morning, actually. Because the Raptor is a hybrid, it sacrifices quantity of signals for quality of signals. When we ask owners, what would you rather have? Would you rather have more signals or would you rather have higher quality signals? It was pretty much unanimous that they wanted higher quality signals. Scott says, yeah, personally, I like to trade 15 to 20 times an hour for 22 out of 24 hours. Traders do odd things. I know of one fellow who he trades Forex, and the Forex market tends to move on a 4-hour cycle. He checks his charts every 4 hours, day and night. He's got an alarm on his watch, and every 4 hours it goes off. It wakes him out of a dead sleep, and he will go look at his charts if he has a tradable signal. And then he'll go back to sleep for 4 hours and wake up again, and all through his day, whatever he's doing, he'll stop and he'll check his charts. I don't know. It seems a little bit more difficult than it needs to be. Yeah, maybe. Anthony says that's chasing money. You never chase money. I agree, you never chase money. He does okay with it, but it's just, what kind of life is that? Shoot, go to work somewhere for 8 hours and at least you get the rest of your day off. Chained to your computer. I know another fellow. I swear I tease him that he's a cyborg because he's always got his computer with him. He's always checking his computer for a trade. I enjoy trading, don't get me wrong. I can be as obsessive as anyone. And maybe more than most. Mark makes a good comment here. I treat scalping more as taking the high probability signals with a few contracts and go all in, all out at the profit target. Wash, rinse, repeat. I'd love to hit the runners, but I've been more successful at not giving it back the way I mentioned. I would agree with that. Because the markets tend to trend only about quarter of the time, that means 3/4 of the time, we're going to be in more or less a sideways trading range. Which means that 3/4 of the time you're probably going to do better taking profit on target. Now on my trade here this morning, sure, I could have got a little bit extra out of it rather than get my $100 target. Let's see, I probably would have gone into parabolics, which is my habit, and my trade would have ended up where was it? Getting stopped out down here. Oops, stop that. My trade would have ended up getting stopped out down here. So sure, I could have got an extra $50 out of the trade. If I didn't, though, where am I at now? Right? I would have had to ride out that swing. And by now, hopefully, I would have rolled my stop here. So I still would have walked away with about $100, assuming the market is reversing. There's really only two strategies when it comes to trading in the market. You're either going to try to be a scalper, or you're going to try to be a swing trader. And when you're starting out, it's probably a good idea to pick one or the other and stay with it. If you can't decide, start by being a scalper. You'll probably do better. Swing trading, it works as well. However, when you're swing trading, again, you need to run a proper stop. So let's say we're looking at this #1 signal. See, when you're scalping, you can get by with a tighter stop. But when you're swing trading, because you're trying to hold on longer, you really need to keep that initial stop a little bit further back. So if you go with my 2 swing rule, you could say that's swing #1. You could say, okay, well, here's swing #2, but that swing's reasonably close, so maybe I'll cover at least to here, but the ideal stop is still above the high of the morning. So let's say we cover the trade there. Now we're going to try to swing this trade as far as we can. Right? At this point, it's probably a good idea to at least bring the trade to break even. And if the trade continues lower, great. If not, well, you're out with break even, or maybe you can capture $50, $60 here. So it's not a total loss. The problem is, trading this way requires a great deal of patience, something that I find most traders are a little bit short on. And it's difficult too. You know, I delete the P&L so I don't see it, because at this point, it's probably ticking 150, 160, 150, 160, 140, 150. And you're looking at that, and you're looking at your $300 stop, and you're saying, well, I got a $450 risk exposure. Should I just take that? I also find that if you're trading singles, that swing trading is more difficult, because you're constantly faced with that question, do I take profit or do I try to run it out? See here, Marlene says, I got killed scalping, doing better with the Falcon and Raptor trades. See, that's what's working for her. You need to find out what's working for you. I suppose that's why there's so many different trading methodologies out there, and so many people looking for the Holy Grail. They think it's just one thing, but it's not. You actually need to find out what's working best for you and then go with that. I know one fellow who goes as far as saying you should see a psychoanalyst and work out all your issues. And what he means is in relation to your fear and greed, and again, I'm not saying these things with an overly negative connotation, but rather that it's a fact of trading. You're going to have to deal with money that you have on the line. You're going to be fearful of it. You're going to have to deal with money you don't have yet in open profit. So there's fear and greed issues that you got to deal with as a trader. All right, so we got the follow-up number 2 signal after the number 3. These tend to work out a little bit better. So there's the hard edge bounce. There's the number 3. Here comes the number 2 signal. And the hard edge of the trading band is the profit objective for that. And it looks like we should be able to drift up there. Yeah, see, I'm glad Marlene's sharing this. Marlene says, I overtraded with scalping for sure. And that is an issue when you're scalping. You're always looking for that next opportunity, right? And it's easy to trade too often. Most traders would do much better if they traded half as much. So however many times you're trading, trade half that many times and you'll probably make some money. We're trying to get a few more bulls into the market. Slightly more bullish right now. So back into the hard edge. Again, we normally anticipate a reaction here. Getting some mixed signals. We got a first micro-macro cross on the hawk. Bearish signals so far on the falcon and the raptor and eagle. And the falcon starting to look a little bit more bullish as well. So this first micro-macro cross is a high probability scalp. Probably got to cover the trade near the low or ideally even below the low. Because I would consider this counter trend, however, I probably would only go in with a single contract. I don't think I'd be too crazy about getting too heavily leveraged on it. A little bit of a pop above the high should get us to our profit objective. I would agree with this. Marx has a lot of resistance at the 62.26 level. I wouldn't be surprised if the NASDAQ goes up to that level and turns back down. Part of that would be the old support that's there. Once you break a support area, you should always look for the retest. Sometimes it comes quickly, sometimes it's more drawn out. This looks like it's one of those instances where it's going to be a little bit more protracted. They're trying very hard to sneak up there, so far with only moderate success. Well, what do you know? The weatherman was actually right today. It's starting to rain. That's not like the weatherman. The euro is starting to fall off ever so slightly here. May open itself up to something in the way of a cloud crossover and a number one signal. So we got the earlier short signal here about half an hour ago. And now we're looking at a little bit of a pullback, and that may develop into a cloud crossover signal. Looks like the euro dollar may be topping out. It's also getting near the end of the session, the European session, so we don't want to get too excited about shorting, or at least not too aggressively. Oh, shoot, I was looking over here at the euro, and I missed that first micro macro cross 4-arrow consolidation that we had here on the hawk. Darn it. Well, some nice follow through on that one anyway. For me personally, I tend not to watch too many markets at the same time. I just can't devote enough attention to each one. Again, I think it goes back to the idea that you don't need to follow a lot or do a lot, but rather capitalize on the opportunities when you have it. I think a lot of traders were looking at the 62.26 level as a potential area of reaction, but so far, not so much. Yeah, Mark, you could be right. Mark says it might turn into a new level of support. You can't treat these things too finely, right? Now that we've reached this whole 62.26 area, just because we've broken it by about 5 points doesn't mean that it's not necessarily been invalidated. I think the bigger trend still is down. I don't know. We'll see. We're also in the middle of the daily trading range, too. And this area right through here, through the middle, is always really, really difficult to trade because it's too balanced, right? The market started up here, went down, didn't like it, came back up, and now we're right in the middle of it all. So they're fairly content where they are, I think. The Raptor, of course, getting a little bit more bullish now. We're working a possible number one signal, possible cloud crossover. The median line, look at that. The median line and the low of the day also around the 62.26 area. Yeah, that's, that's something else. We may have seen our best opportunities so far, though. Yeah, after that little run up, we're just kind of stuck sideways again, which kind of has been the theme. The Hawk now working a macro pullback as well as building into a 4-arrow consolidation. Technically, we only have 3 signals, but it's getting there. I don't know if we're going to get another trade here before the top of the hour. Like I said, things just kind of in a sideways drift. Finally getting that number 1 signal here in the euro. But like I said, this is very close to the end of the European session. So if you're going to take that trade, you do need to be careful. Because most traders are hitting the pub. Okay, the Raptor's back on the hard edge, as is the Eagle, and the Hawk making its 4-arrow consolidation slash red bar buy. So a couple of bullish signals here. The Falcon, the only one out of sync with all of that. Of course, the Raptor and the Eagle not producing a signal just yet. The only one actually producing a signal right now is the Hawk. With the red bar buy signal, if you feel the market is more bearish, like let's say you're looking at the overall trend today, and you're saying, oh, well, this latest rally is nothing more than a pullback, you can also sell the failure of the red bar buy. So in other words, here's the completed signal. We've got the warning dot, we've got the triangle and hash mark. You can actually look to short that rather than buy it. And this is actually true for all the signals. I don't tell you about it very often because they're almost always counter trend. And I'd rather you concentrate more on your with trend signals than your counter trend signals. But here you go all the same. There is a counter trend opportunity there for you. I don't think it's a especially good trade. I think the session is kind of winding down a little bit. We could see a little bit of a pop higher or lower here, but I don't know. It just seems to be that kind of day. You know, we had the early move, and now we're a little bit stagnant again as prices are consolidating one more time. Well, I think this is probably a good place to wrap it up for the morning. Pretty good morning overall, and we'll do it again tomorrow. We'll talk to you then. Bye for now.